All right. Just give me 1 second. I just want to confirm that it's really saving the shit.
Yeah.
Okay, should be fine.
So Mike, are you host?
Yeah, I'll guide the conversations.
Okay.
Hey everyone. Yeah, welcome to the Price Discovery podcast. Joined here by myself, John Caturone, and Alexandra Marco. And yeah, just gonna be taking you through our thoughts on what's happening in macro, how that's affecting BTC, and I guess just also broader assets across the globe. I think this week's been pretty interesting. We've had a very interesting narrative unfold with it, which is sort of, I guess, like the biggest corporate holder of Bitcoin in a potential unwinding situation. I mean, that's how I've been interpreting it. But yeah, keen to get your view, Alex. Like, I know you've got quite a lot of experience, trading digital assets, but just understanding flow and who are sort of the players in the market that can drive prices up and down.
Yeah. The way I see the current situation with MicroStrategy is like the market is clearly signaling something to Michael Saylor and the company. It's basically saying like you have to do something, and if you don't have to do something, like the market and short sellers are gonna keep punishing you. Like basically the only way for strategy to resolve this current situation of having stretch and having strategy common and his Bitcoin stack is basically shoring up cash, building up cash reserves, or sacrificing stretch completely and just trying to unwind it, one of the two. And the market is testing Saylor, and till now he hasn't folded, but the pressure is just going to keep increasing. That's what I think. And which means strategy is going to keep selling off, Bitcoin is going to keep selling off, and stretch is going to keep selling off. And it's only going to keep getting worse until he builds up some cash cushion, call it 5, 6, 7 billion in US dollars. Then by selling MicroStrategy ATM shares ATM, or by just selling Bitcoin into the market, one of the two. Until then, I think things are probably gonna get worse, as we're seeing like this week. And I don't know, how do you guys feel about it?
Yeah, I mean, taking one step back, I mean, the 4-year cycle is very silly. Like, why does it exist? Why can't people front run it? Every cycle we come up with all these reasons as to why, like, the whole market nukes in this final 4th year. I can't help but wonder if we're just like fitting a narrative to this like inevitable retracement to the low 50s, high 40s. But let's just, but putting that aside, I kind of feel like the unwind has mostly happened. And it feels like we're a bit at peak fear with Michael Saylor, and he always kind of pulls something out of his sleeve at the last second. So, like, yes, this guy's over his skis. Like, yes, he's probably there's a lot of tweets out there that say, the Bitcoin whales are trying to short squeeze him. I don't think that's possible. And I feel like he's kind of neutral at this point. He was sort of like the main thing driving price over the last couple of years, or the last few years. I don't think he's a net negative. I think he's probably just sort of benign at this point. no one's going to force him to sell Bitcoin. There is no point. Well, there's no point anywhere in the near future that's he's going to be actually sold or forced to sell Bitcoin. So I think, Alex, just like you said, I think he has to pick which of his children to sacrifice. Is it Master? Is it Stretch? Is it Bitcoin? I think the most likely path is he just hits the ATM on Master. Most people think he won't go below 1 MNAV. I think he dilutes a little bit below there.
Yeah, I think we're gonna trade below 1 today.
Yeah, I think he'll sell below there too. He'll shore up some capital, maybe even 2 billion is probably enough, and then he probably still wants his credit rating. And then yeah, I don't think he's gonna. I can't see him selling a ton of Bitcoin. And yeah, this whole Stretch thing is such a mess. I mean, there's already investigations and lawsuits that are surfacing over the last couple of days. So I think he's just like the scapegoat we've all been needing for this bear market. And then, you know, he'll be sacrificed to some degree, but he's not going anywhere. I think he's going to be with us for a while, and he'll just sort of like, you know, putter along for the summer, as my take.
Yeah.
Yeah.
Yeah, I agree that we in crypto we always do need a scapegoat in a bear market. Like last bear market was, you know, Do Kwon and SBF. So yeah, it would make sense. Like, and it's always like the same people who are driving up the price on in the bull that are then gonna get sacrificed later on. You know, Do Kwon, Suzu, and SBF. And like this time was clearly Saylor driving the market, so he's getting sacrificed. Yeah, it's kind of funny.
Yeah, and look now, and look, I mean, like people can hate on Stretch, like yeah, it was kind of successful. You know, like obviously, like it was successful in raising. Certainly, did, you know, and I don't think it's ever going to come back to 100. So
No.
it was sort of, you know, successful for a period of time, I guess. You have Bitminer doing the same thing. They skipped the convertible, the converts, and went right into the preferreds. So I think that kind of like put some weight behind that strategy, for lack of a better term. But yeah, I think Stretch is probably never going to hit 100. And you know, so he's supposed to announce the dividend. What is it, next week?
Yeah.
I don't think he changes the dividend on Stretch. I think because everyone's been saying you have to increase the dividend to get it back to par. This thing's so far below par, there's no amount of dividend increase that's going to get it back to 100. So he may just say, fuck it. Like, I'm just going to keep the dividend the same. I think that would be kind of a wild card, but maybe
like,
my base case.
Hypothetically speaking, what would happen if you turned off the dividend?
He can do that at any point. So with Stretch, it accumulates. So he owes it at some point. So if you skip 2 dividends, you still owe those 2 dividends in the future.
I didn't know that he can't get out of it.
Yeah, he's sort of like contractually obligated to like give this, but you can skip, right? And look, you know, if you skip a couple quarters in a bear market, and then once Bitcoin's back at 100 or something, you resume it. I mean, I don't know what he's thinking, but yeah, that's how the preferred works.
Yeah.
That's even worse than I thought it was. I didn't know that. I thought he's just like as a courtesy, he's like, you know, keeping it on. Oh shit.
Yeah. I think it's. Now I was just gonna quickly say, and I think we kind of touched on this a little bit this week. Is like, does Saylor need to be out of the market for us to sort of even get to a point where Bitcoin is at a healthy stage again? Because I think if you're an allocator, there's this risk that's just hanging there, right? And even if things are good, and we have actually seen that, like we've had, you know, all-time highs in gold, equities as well. But you know, Bitcoin has been very like underperforming. So it's like, you know, maybe Saylor does need to be taken out to the market so we can have this like, you know, situation where the market is, I would say, healthier, because he's introduced quite a lot of debt into the ecosystem.
Yeah,
I think all we need is neutrality. Just stable. Saylor just needs to be like neutralized. He doesn't have to be taken out. He doesn't have to puke up his Bitcoin like some people are theorizing. I think he just needs to have like a couple years of dividend coverage, and people just forget about him.
I wish.
And I don't know. There's probably some event later. You know, the market tends to bottom out, you know, around October. So I think there's probably some additional shoe to drop. It almost doesn't matter what that is. And then he'll just be neutral. I don't think he has to be completely taken out of the market.
Yeah. I was actually having a conversation about this with my wife yesterday, and yeah, that's the things we talk about. Like, she was kind of arguing with me like about how Bitcoin feels sort of like fucked forever, like that it can never have experience a bull market again. And I argued that like right now, yeah, things are bad, right? Like Bitcoin is trading at 60K. It's not exactly like a super cheap price. It's a bit cheap, but not really. Feels like fair value, sort of. And you have like all this narrative overhang, and you know, all of this stuff. And obviously, no big allocator feels comfortable getting into the market currently. But when you think of a world where, you know, Saylor has to sell some Bitcoin, or this situation gets resolved in some kind of way, and we do get a flush to call it 40K, call it maybe 30K on BTC. And, you know, the situation is somewhat resolved. There's no imminent risk there anymore. And there's, you know, progress on a quantum front. Suddenly Bitcoin looks like an amazing trade again. You know, 30 to 40K. That's suddenly like back to all-time high. That's a 4x. And the way then these things play out is, you know, at 30K, that's where the crypto natives get in again, right? Those who still have some cash left, and they're gonna drive, like, that's gonna be like the first wave. They're gonna drive it back up to 60. And then at 60, with like, you know, liquidity getting better at those price levels, like bigger allocators gonna start looking again and be like, you know what, like, looks like this thing has some momentum. All the risk has been cleared, and then like the you know, the longer term money and the smart money, the smart institutional money is gonna get in, and you know, before you can look up, you're suddenly trading, you know, back in the hundreds potentially.
Yeah, I tend to think you're right. And I think this all just has to play out. And again, the 4-year cycle, it's worked every time. So while it's silly and it just breaks everyone's brains, that it just we're matching it almost for the last 3 or 4 cycles. It's like, you know, you almost have to assume it's innocent until proven guilty. You know, there was a really good post I saw from Michael Nadeau, and he was just sort of saying like last cycle, like, had everything against Bitcoin, right? You had AI, like, siphoning capital and attention. You had like gold and silver mooning. The Fed balance sheet was getting smaller. And you would think that like Bitcoin would go nowhere. It like 7x'd off the bottom. So like now, you know, he was like kind of retweeting Dalio, and who was talking about China. And it's like, all right, well, what do we have going forward? We have fiscal deficits, you know, probably expanding the balance sheet. You know, you have this sort of like unipolar world with you know, maybe less wars coming out of that. And then just like now crypto's legal, all of us, you know, which it wasn't in the prior admin. So yeah, like I can absolutely see this back at 200K in a couple years. And that's a great, you know, 3-4x from wherever it bottoms. I mean, you compare that to gold. Like I'm bullish gold here. I'm buying gold here. It's probably like a 2 or 3x, right? I think like gold can hit 10K by the end of the decade. It's a much safer trade. But yeah, like if you're looking for that kind of 4 or 5x, maybe 6x, Bitcoin's probably going to be pretty attractive sometime towards the end of the year. And really, I mean, you could probably just DCA for the second half of the year and do really well. Like kind of just like not try to trade it too hard.
If you had to come up with some narrative that could potentially lift the market up again, like obviously price follows narrative, right? Like how I think about it is we first need to flush down a bit lower, and then value buy, like actual value buyers start stepping in. But what do you think is a potential narrative that could drive up price, or that follows the price once it goes up?
I think just like the debasement trade gets cool again.
Yeah, I agree. I think debasement trade. We've also got all the pipelines for just capital to flow. So I think it's just a more healthier rally is what we need as well, where it's like, obviously we had like a specific entity and a very good narrative, but a very strong singular entity as well, sort of driving price. So I think we can get like a healthier move as well if we have I guess like not so much concentration of risk for sure. So I guess, I mean, on our side, it's just keeping our ears close to I guess like the market and what's people with risk appetite are going to be looking for. I mean, the other sort of like interesting sort of question I wanted to also put towards you guys is, like we have a very interesting situation right now with what's happening around sort of like the AI trade. It looks like we're starting to see the first signs of a potential unwind of this trade. But yeah, just curious to get your views on whether you agree with me, and I guess like what to expect going forward, I guess like in the short term around what we're seeing in US equities, but also I guess like emerging markets with the Kospi as well. Yeah, curious to get your views.
Alex, go ahead.
Yeah, okay, sure. Yeah, I mean, I think like short-term things clearly overheated. Just when you look at the chart and like overall sentiment, and when you talk to like normal people who are usually not into markets, yeah, I mean it's like it's rough as fuck. Like definitely if you're long, it's starting to get uncomfortable, and Nasdaq does look like it's kind of putting in like a double top sort of pattern. So yeah, short term I would definitely be a bit cautious. Does look like we're gonna, I think at best we're gonna start ranging at like current levels in like this 7-8% range that Nasdaq has put in. At worst we're gonna get like a 10-15% correction, and then we'll see. It's interesting to me that OpenAI are delaying their IPO, like after seeing how SpaceX has done. Apparently their investment bankers have said that market conditions are not as favorable, which is kind of surprising. How do you guys feel about that? Like couldn't like market conditions be better than right now? It's possible.
They're supposed to be, I guess. I'm sure that's what the feeling was with SpaceX, right? And I guess like we're starting to see, I guess like that, maybe the market's telling something else compared to what is expected. but yeah, I think it's a good time to sort of like be cautious. I mean, just that is a very, very telling sign. What's happening with OpenAI, and the fact that we sort of like, what you would say that we're in, like, I guess, like, it's very hot. Like, there's a lot of activity going around AI. These are supposed to be favorable conditions, and the fact that like one of the biggest one of the big stakeholders to this whole narrative is cautious is quite telling, for sure.
I have a lot of thoughts. This is maybe the hardest kind of trade here, is what to do, because we are in this like AI productivity cycle, and it's tough to lose, to reduce exposure to that, because it's just so structural. But for sure, where I think we're a local top, there's a lot of froth, like you said, Alex. But it's tough to know like how much to sell, right? Do you want to be in Mag 7? Do you not? Generally, I feel like there is going to be a correction. It's probably not now. We might even get like a little bump here, but I think toward the end of the year, maybe similar, kind of lining up with Bitcoin too, kind of in that like September, October timeframe, you get kind of a correction in Bitcoin, in Nasdaq, in the AI trade. We get the midterms behind us, and then I think we can probably resume from there on all fronts: risk assets, debasement trade. I mean, on the froth front, like I was hearing someone sort of shilling like ARK, like getting into ARK products. So my like Kathy Wood is back and like seeming cool and smart again. So that is a top signal for sure, if not maybe just locally. And I don't know, like I think there's a strong case for Mag 7 to kind of like maybe have a small correction and just be like lower growth than it has in the past. But it's so tough, right? Like when a lot of the advancements are coming out of, Google and Amazon. And so I don't know, like I'm very long Google, I'm very long Tesla. I think like Amazon doing some really interesting stuff. And as soon as people are bearish on like Apple or Microsoft, they go and like, leapfrog someone. So I feel like we can. It's easy to kind of get caught up in the toppiness and just sell everything. I feel like this is probably a part where you just want to diversify into, start DCAing gold, start DCAing Bitcoin, maybe own some floating rate loans or something like that, and you just kind of wait out the rest of the year.
Interesting. Yeah. I do wonder if like obviously we're in like this capex cycle, right? And like we all know how capex cycles end, and I kind of wonder at what point, like, are we gonna be at max capacity? Like at what point do we have too many data centers? And I think sort of what's no one is factoring in is like how like these models are gonna get like more efficient, gonna use less tokens, gonna use less computing power. So we might end up with like tons of data centers that we're not gonna use. So yeah, I don't know. Like you guys remember the DeepSeek sell-off that we had at the beginning of the year, right? The market got spooked for like a week or so.
Yep.
Yeah, I don't know. And also when you look at Nvidia and stuff, like it's not really pushing anymore. I feel like there's like some early signs of demand maybe topping out there.
Yeah, I mean, speaking of demand, I feel like there is, I think, it's just seen sort of pricing with the increases of tech products from like Xbox and Apple. I think that's like where I feel like that could actually, that pricing increase is going to actually affect, tech demand in general, and that is going to sort of like reflect on, growth, the tech growth that we are seeing. So I also find that sort of like quite interesting, just like, you know, companies are not willing to, tech is not cheap anymore. So is that going to actually be the, the catalyst for slower, you know, just general technology demand as well? But I mean, yeah, sorry, John, I kind of interrupted you there, but yeah, keen to get your view as well.
Yeah, I mean, yes, like token cost is going to come down, especially for like routine tasks, but I don't know, like it does seem like there's there's right now end in sight for the need for compute. I think it's just going to continue and continue and continue. I think that there's, at least here in the US and probably around the world, it's really, really hard to build data centers. There's a lot of data centers getting canceled, getting pushed back. This K-shaped economy where, the rich get richer. The data centers are the scapegoat in that. And I think this is going to be a key political position during the midterms that are coming up later this year. So, yeah, it's, if anything, I think we're probably at risk of not having enough data centers. And there's also a natural governor, right? We can only produce chips and create enough power so fast. And so it's not like we can just like infinitely print these data centers, even if we were allowed to. So I'm not as worried about that. I'm more just worried about the prices of these things, right? Just like the speculation, the euphoria driving these things so past fundamentals. I don't think we're quite there yet. Yes, I agree it's frothy and it's probably a good time to diversify and take a little profits, but and maybe diversify out of just simply NASDAQ and Mag 7 and have a bit more active management. But I'm not as worried about that in particular, that there's like going to be some like glut of data centers. Right now, every single chip in every single data center is like fully utilized. And the bottlenecks still are power and the manufacturing of these chips and approvals for these data centers so far.
Mm-hmm. Yeah, well, what do you guys think about I guess like Micron and SanDisk, right? They're sort of really benefiting from even just this tech sell-off. They've sort of, I think they've been the outliers in terms of positive performance. But I mean, yeah, just to your point, John, you speak about like, yeah, there is sort of still, the demand still seems to be there. And I feel like the trade is now, this AI trade does seem like it's getting a little bit more complex with, these sort of like the Mag 7s coming down a little bit, but now you're starting to see, Micron and SanDisk still being able to have like, I guess, a bit of momentum. But yeah, just curious to get your views, I guess, like, in the market, like how is this sort of like playing out, and what could you do if you're looking to still hold or still have exposure to this AI trade?
Yeah, I think, look, if you have a basket of these like AI names outside of Mag 7, you're probably not going to do too bad. Like, maybe we've hit a local top here, but if you're a 6-month investor, I think you're going to be fine in that stuff. What is interesting is I think we're starting to active management in AI start to outperform. And I think the demarcation line was when and others started issuing tons of debt. And if you look at like the charts of Micron and Mag 7, they kind of like generally track each other until Google did that huge issuance of debt. And so, so I think we're going to see more of that from Mag 7. And so there's these names who aren't issuing tons of debt where I think you can maybe outperform. But to me, like that stuff is kind of probably played out, like the memory side. It's just gotten so overhyped. Like, again, it probably continues to track the industry, but you've probably missed the 5x, the 10x. but I think I think as traders we should be thinking, what's the next Micron, what's the next SanDisk. Some ideas would be metals. I think we did have a bit of like a metal focus, but there's critical minerals, there's rare earths, even basic stuff like copper and lithium hydroxide. Everything in AI, everything in space, everything in robotics, everything in data centers is going to need a shit ton of copper and lithium and silver and some of these rare earths. And there's no amount of optic sensors and lasers that are going to get rid of copper, even though that's like kind of it right now. So I think that's one idea. We can talk more about that. Another is just listen to what Trump says, right? When Trump is IBM, they're doing some cool quantum stuff. I guess Google is too, but I've been looking for an entry to IBM. I think we might have one maybe now or soon. So that's maybe another idea. But I think we should be thinking about what's next.
Yeah, I like copper. It's also currently trading at a nice level, like right around $6 front end month contract. I was kind of slightly concerned when basically all commodities were selling off the last couple of days. I was thinking is the market signaling something like, recession incoming or something along these lines? But yeah, generally copper does look attractive, and I mean I think there's some good folks in the trade. I think Druckenmiller is in, and
yeah. I mean, look, all these things have been in a bull market, so I just chalked it up to a natural pullback mid bull market. You gives just made been on an incredible tear last year or two. Same thing with gold and a lot of these other commodities. But yeah, I think I like copper, silver, gold here. Maybe I don't. I've been looking for good entry points, so I've been slowly kind of building a position. But these, historically, these things tend to bottom out towards the end of the year. So maybe similar to Bitcoin, and I feel like all this stuff's just going to go on sale increasingly. So I've been kind of buying because I still think these are entry points, especially if you've sold almost all late last year or early this year. I think this is a good time to start accumulating some of these things. But if you already have bags, from last year, I would just wait it out. You're probably going to get better prices on all these things: gold, Bitcoin, metals, stocks. So yeah, that's the amount.
Where do you guys think I mean, yeah, it seems like everything is sort of wait for a good entry. So it's basic. It's is right now the trade right now is just sit in cash, sit in bonds. That seems to be the prevailing message from you guys. But yeah, I don't know. I mean, it does seem like that's sort of the trade right now. And then to your point around commodities, yeah, it does seem like, I think to Alex's point, I also got a little bit spooked and when the commodities sold off, and I sort of also sort of doubted, I guess the narrative, whether has it played out, has they been sort of an equilibrium. But yeah, very interesting that you guys believe that, okay, this is the right time to sort of go long commodities. I do think, yeah, gold is quite attractive as well. Just it's quite a significant pullback, and it's at sort of a major level of support. So I think it's a really good time. And then you've also got I think taking profits, and people are probably looking at diversifying now. So I think you could also see a little bit of that flow come into gold, which has historically been really good place to sort of store value. But I'm interested to see whether will we get the same sort of momentum that we did get? I guess like late last year, early this year, for gold. Could we see sort of I guess like the continuation of like this commodity super cycle, or is it done? Are we just gonna range and chop for commodities? Are you just sort of like buying? Are you looking for a new all-time high on gold? Copper, like how do you guys feel about like the trade? I guess like medium to long term.
Yeah, I feel like on generally, like very broadly speaking, commodities. I think we're gonna be in a structural bull trend for the next couple of years. Like you have like the AI stuff, but then you also have the shift to multipolar world and like countries understanding that supply chains are fragile, and the Iran war was I think was another wake up call to should have been like another wake up call to a lot of country leaders. So I wouldn't be surprised if we see more strategic reserves for critical commodities getting built in many countries. So that should be a structural bid behind a lot of commodity names. And I mean, as for gold, I think it's I think it has gonna have a lot to do with just rates. Like rates gonna come down, and inflation. I do think so. I think war is just posturing, and I don't think it's like we're gonna see any hikes coming out of the Fed this year. It's a really weird time to suddenly be hawkish, like when war is done, oil is back into the 60s now. Like, what are we doing?
Yeah, I actually we're in complete alignment. Yeah, I agree with everything you said there. I think with like commodity metals outside of gold, like there's just a structural bid from happening with AI and robotics and space and defense and data centers. You're just going to need more of this stuff no matter what. And we've just like, we don't have the mines and the refineries, to make it. So there's just going to be this like supply demand squeeze. And I think you could see like 2x on some of these things pretty quickly. I don't have a strong view as to when, but I feel good in that trade for a few years. On the gold side, similar, but for just like you said, it's more about rates. It's more about geopolitics. I think people will just want to diversify away from the U.S. dollar increasingly. You see China and Russia and other the other side of the unipolar world or the multipolar world. And yeah, I just think like that debasement trade is going to kick in at some point, right? We were shrinking the balance sheet before. Now we're definitely going to be expanding it. With Warsh, yeah, I think it's very silly to think he's going to hike rates. He said he was getting rid of forward guidance and then literally gave forward guidance. Like, he was like, we're gonna, stabilize prices, and it worked, right? So like he literally did forward guidance. So I think we're at peak hawkishness, peak inflation, and I think you want to be in things that benefit from those two things coming down.
Cool. Yeah. Anything on I guess maybe more directed at Alex, options wise. You did say, do you think it makes sense to sort of like play? I mean, there's this sort of like overhang of risk. We've got a very, very like expensive, put skew. Is it worth it to play this sort of like downside trade, buying just for now, right? Just sort of buying puts, waiting for this fundamental trigger or this narrative trigger where it's like, yeah, we've got some form of like acting from Saylor. Like, yeah, what's the feel? it does seem like, yeah, we're getting market. It's sort of like it's still in the sort of like range that we've been in for last maybe like a month or two. But the vol is pricing quite aggressively. Like it's been increasing. Like there's gonna be a structural. It's almost like it's pricing in a structural break soon, just over time. So is it attractive right now? It does seem like it is, but yeah, keen to get your view there.
Yeah. Obviously, like skew is extremely negative currently. Like we're talking, -10, like a month out. That's and like skew is negative across the whole curve. Like even like a year out, skew is -5.5. Just like basically unheard of before. Like Bitcoin has always had a call skew. This only changed this year, and this is on one hand the market pricing, in structural risks in terms of MicroStrategy and to some degree quantum, I would assume, and then basically endless supply in terms of call overriding activity. So you have miners, family offices, like basically everyone who's sitting on a meaningful position in Bitcoin and does not want to sell is selling calls.
Yeah.
And it's worked great over the last year. They've probably gotten a nice chunk of yield out of it. The good thing about it is it makes vol. It suppresses vol. The bad thing is so it makes vol cheap if you want to be a buyer. The bad thing is dealers are getting more and more long gamma, which then means on the way up there's gonna be selling from dealers because they have to monetize the gamma that they're buying from all of these overriders, which is why when there's not a concrete narrative in Bitcoin. We saw that between February and April, like we are stuck in this very tight range, and just nothing's been happening. And I think this probably this kind of structural shift in the volatility market that we've seen over the last 2 years, with like introduction of the ETFs and then the overriders. I think we've probably we're getting sort of to the end of it now. Like I don't think things can get a lot worse than here in the volatility market in crypto. So I don't think vol can come down a lot more. I think like high 30s is probably gonna be the bottom, just because there's gonna be an end to Vega supply again from these overriders, and the market just realizing around 40 vol basically. So in terms of trades, it's really tough. You don't want to like long puts outright here because you're definitely overpaying. But then of course, like the options market is clearly signaling that like we're probably gonna go down. So instead of playing options here, I sort of prefer just taking the options market as a signal. Whenever we see 25 delta skew, very negative, like in the tens, and the market hasn't really broken down yet, which it hasn't really, then that's sort of a good signal to to have a bearish bias and wait for short entries.
Yeah, makes sense. I mean, I tend to agree. I think it's quite difficult. I like the idea of sort of like maybe like put ladders, maybe a shorting call, like basically shorting a call, shorting a put, long in a put if you've got that bearish bias and you don't want to really play the vol game. I like that. So I mean that's the only thing that I have top of mind. I think the other thing that's quite interesting is like what's happening with altcoin options. So you've seen Hype do quite well. I'm interested to see on what happens with Zcash. I mean, Derive just launched there. So I think if you're looking to sort of like trade, if you want gamma, there is other markets that don't have this structural option selling. And I think that's where you want to play. And as we've seen with what's happened with Hype, really good things there. So I think that's where you want to look. And then ETH is a bit interesting. It doesn't also have a very strong narrative. Do you see sort of like the ETH BTC spread, vol spread, like increasing or tightening? Curious to get your view there, because that's quite interesting as well. I'm also like, I don't think we have. Do we have this? I mean, we do actually have structural vol selling there as well. So it's a similar case to BTC.
Yeah, we do have some structural vol selling, less of course than Bitcoin, since the options market is just smaller on ETH. But yeah, there's some structural selling, and I think overall, in terms of what ETH is realizing and how much downside it potentially has, like ETH vol gamma is probably looking a lot more attractive here than Bitcoin. So we're talking like a 15 volt spread between BTC and ETH, and especially when like the market is really risk off, like ETH can realize in the hundreds without a problem. So if I had to buy vol here, it would probably be on ETH, somewhere like basically buy like monthly vol, like end of July vol at 59. That looks pretty decent. I'm pretty sure like the market is 59. That's basically implying around a 3% move per day. ETH is realizing that without a problem, and so I think you're most likely gonna like at worst gonna break even on this trade if you just buy some straddles on ETH and delta hedge them. But then if the market really breaks down, or we do surprisingly get some good news out of MicroStrategy, then you're gonna monetize that volatility quite well. So yeah, probably ETH gamma looks quite good here still.
Do you guys think Saylor will start selling puts to raise cash?
Oh gosh. I hope he doesn't, because then he's gonna get hunted.
But like, he's like, he is buying Bitcoin at the market. So
yeah, he's 100% gonna get hunted if he does that. Like, folks gonna look at, like, folks gonna find out where his strikes are, and they're gonna bring the market down there, 100%.
I mean, maybe he wants. I mean, maybe he wants it. Maybe in the short run, right? He gets to buy more Bitcoin.
With what money?
I know, yeah.
With what money, John?
I mean, I think his Bitcoin buys are kind of a meme at this point. It's kind of like token buybacks. It's like they don't actually do anything, but they're a meme that people like. So I think his Bitcoin buys this year are just going to be like part of his narrative that he's net buying Bitcoin. But yeah, I don't know. Like if I was him, I would be debating if I want to sell some puts, and just buy lower basically, even if I do get hunted. I like the game theory, but I think it's an attractive proposition if he's backed into a corner.
Yeah, but so you're suggesting like selling puts and like collateralizing them with Bitcoin.
Yeah, and like I don't know if I'm suggesting, but I'm more just proposing an interesting question.
It's definitely an idea, and like probably has crossed his mind. I mean,
he's the financial engineering guy, right? This is the one lever he hasn't pulled yet.
Yeah,
that we know about.
Net on net, it just adds more leverage to his balance sheet,
which he loves,
and it adds derivative leverage, which is like the worst. I mean, I think if he does that, like the market will get so fucking spooked, like he's actually gonna liquidate it. Yeah.
What do you guys think about Zeke and hype, and what's the option markets telling us? You mentioned there's some new option markets. I feel like hype, it's probably a good time to start taking some profits. Zeke, maybe you want to start. I feel like in the 400s is like a reasonable place to build a position. I haven't done either, but what is the option markets telling us anything interesting there?
I mean, the options there feel quite expensive, like 90 vol basically at the money for like options 1 month out. I don't have it at the top of my head, but if you're like a long-term hype holder, like some overriding could actually make sense. And we're looking at a bit of a call skew here even on hype. So generally the market is a buy of calls probably. Obviously these are relatively small markets yet, so like most market makers for these altcoin options, they're basically just taking Bitcoin, their Bitcoin pricing model, and calculating how much beta like hype or Zcash has to Bitcoin, and then just multiplying their option prices with that. So you're just looking at like Bitcoin ball multiplied to some extent. But yeah, as for like playing hype on the long side with like options, it's certainly not cheap. Let's put it that way.
What's your guys' view on like options versus perps? I think like perps kind of captured the retail attention these last few years. It's just like an easier, simpler, probably better product for retail. But I don't know. Are you guys seeing options making a comeback, or over the next year or two? You think with Coinbase bought Deribit, you have Derive, kind of increasing. You're seeing new options protocols pop up around different chains. What do you guys think about options versus perps?
Yeah, I mean, I still think perps are the superior product, at least for retail. It's green button, red button, leverage slider. It's very easy.
Yep.
I think Robinhood would actually do a lot, even better, if they had perps instead of options. I think they would do a lot more volume, would make a lot more money. Look, options are, they can be played in easy ways, but like the way retail is playing them, like it usually doesn't work for them. Like perps are actually, in most cases, a better expression of retail trades. Meanwhile, like options are, give you so much flexibility. that they're just perfect for, you know, institutional traders, which is why I think, it will just stay the way it is. We're gonna get to, you know, some traction here and there with products like Derive, but yeah, I have a hard time imagining like perps, you know, perps losing a lot of market share to options in crypto. Like when Deribit was acquired, like we were talking at the fund about it, and like everyone was just very worried about just Coinbase just fucking it up with Deribit, because they tend to do that, and like they're not exactly some of that, they're not really good at the like building like institutional sort of trading solutions. I know they have institutional clients, but like their actual trading products are not really good. So yeah, we're kind of currently seeing like Coinbase and Deribit like merging their infrastructure and like their trading systems, and I mean, it's not looking like really great, to be honest. Yeah, like we're actually currently, like when building the product, we're actually having to do a lot of like bug fixing just for them, because things are actually not working. Yeah.
Yeah, I feel like options market are going to get increasingly institutional. I agree that retail used options for leverage and dopamine, but that's because they didn't have perps and they didn't have prediction markets. So now that they have those, I think those are just like much better ways of gambling and feel something for retail. But yeah, and it's almost like repos. You know, repos are like a uniquely institutional thing now, or I guess they always were, but they're just a massive fucking market. So I feel like options can be like that. You know, it's just something that institutional uses, maybe even like way more than they are today, especially as we see more and more assets get tokenized. You can see more on-chain options. So yeah, I think it's like but that would mean that the flow gets more toxic. The spreads come down a little bit. So it's like still a very useful thing, but maybe there's just not as much juice to squeeze. And I don't mean like next year. I mean like over time.
Yeah, agreed.
All right. Let's wrap up with how we're positioned and what are we looking to be buying or selling this week, next week.
Yeah. Michael, you want to go first? I think you're muted.
All right. While we wait for Mike, I'll go. So yeah, I guess I touched on this a bit, but I'm not buying Bitcoin yet. I think I'm going to wait for if we don't get into the 40s by, call it September, I'm just going to start buying then. I think but if we get to the high, 40s or even low 50s throughout the summer before then, I think that's when you start maybe doubling up your DCAs position, I think in the 40s. And, yes, like maybe we could get 30s, I think there's even a good case for why we may not see 40s, but I think like anywhere in the 50s, you're going to do really well over like a year or two time frame. With gold, I've been buying around 4K. But I'm saving cash to buy more throughout the summer. And same thing with commodities in general. I've been trimming stuff like Hype and NASDAQ for these other trades. And yeah, cash is an asset. I think I'm not like, Alex, you'd like to be like all in, levered long or like all in cash. I'm like, am I more defensive? Am I more offensive? Taking, trades that may take a few months to a few years. And so, yeah, I think like having, 25% cash is a pretty good idea here. And yeah, that's kind of how, but there's no like, like I mentioned IBM and some other interesting things I've been looking at, but they're just on my watch list for now.
Cool. Awesome. Yeah, I'm actually, I mean, we actually do share some positions.
Hey,
So,
let's go.
yeah. So also long gold, like we probably had the same entry, also bought 4K.
Yeah.
But yeah, just bought some futures, quite aggressively, and yeah, I don't know, like it does feel like a short-term bottom, like there's a potential narrative coming. So it's kind of nice that when you're buying like a local bottom, and it's definitely gonna give a bounce, and then if you're lucky, it can turn into like a swing trade. So that's kind of how I'm playing it. So when probably like around 4,300, there's probably gonna be resistance again. Gonna see how it trades around there. If I don't like it, just gonna get out of it again. If it's still chugging along, then I'm just gonna keep the position and try to ride it to 5K or all-time highs or whatever. Yeah, apart from that, just long some bonds, because I think market is pricing in way too many hikes. Also considering just playing it on Fed funds futures as well, and on the Bitcoin side, yeah, have like just trading short term on primarily on the short side.
Short BTC.
Yeah, but like low time frame stuff.
Okay.
And yeah, looking for preferably for low 40s. That's where I would buy, just eyes closed. And apart from that, I'm along the Korean won as well, because I'm bearish dollar now. I think has strengthened a little bit too much, and I don't think the administration really wants that, and kind of goes hand in hand with rates probably coming down again. That's going to soften the dollar, and apart from that, Korea's economy is doing really well. I think with this year's tax income, like Korea can halve their debt level. Yeah. Yeah.
From like the capital gains tax.
Yeah. Not even that. That's not even included in that calculation. Just like from SK Hynix and stuff.
Just from like revenue, like business. Oh, yeah. I mean, add in all the short-term capital gains tax from the other side of that trade.
Yeah, exactly. So
they can wipe out their debt.
Yeah, they can have it from like 60% down to 30, which is kind of crazy.
Wow, so bullish. Korea.
Yeah, and the Korean won is trading at like 2008 levels, like pretty crazy levels that I don't think make sense. So
yep. All right, Mike, you there? Have we lost Mike? Final last call.
Yeah. Oh, did I hear? I thought I just heard Michael laugh. Yeah. Oh, he's back. Amazing.
No, good. I mean, yeah, back again. But I think I like. I think anything sort of like defensive, I guess, like stocks wise, looks quite attractive right now. But yeah, I'm also sort of in the same boat as you guys. Sort of like long gold looks like it makes a lot of sense just due to I believe there'll be like, portfolio rebalancing in terms of just the amount of people just going to be unwinding positions from like the sort of like overheated AI trade and be a bit fearful. And yeah, gold right now is at a very, very attractive sort of like support level. It's sold off quite a lot. So makes sense. And then obviously you've got the sort of the sort of tailwind for gold, which with what's happening with the Fed. So really like that trade. It's all on my side.
Yeah, good stuff.
Cool.
Yeah, I like those trends. All right,
Cool.
this wraps up. As Alex to say in German, everything comes to an end. Only the sausage has to.
Yep.
Good chatting with you guys.
Yeah. Thanks, guys.
Cheers, everyone.
All right. Bye.